Okay, so I've started tracking my net worth on this channel lately. Literally had no idea what it was before October 2024. So I list all my assets and liabilities, then come to what my net worth is. However, recently I've realized something. There's a technicality with what's considered an asset that means I have an enormous asset that I haven't counted in my net worth videos. So if I do count this asset, my net worth skyrockets to well above 500,000 bucks, almost 600,000 bucks. So in this video, we'll talk about this, and we'll also mention why this additional asset should technically be included in my net worth amount. And no, this isn't referring to real estate, retirement funds, cars, luxury items, etc. Those are already accounted for in those videos. It's also not counting the value of my business either. I could value my business at 1 million bucks and boom, my net worth is around 1 million bucks. But is this fair market value? Would anyone pay for this? Nope. There's some accounting gimmicks and financial valuation shenanigans that happen all the time on Wall Street to skew valuations, but that's also not what I'm doing here. This asset I'm referring to has a legitimate valuation that I'll show you based on company records, and it'll help provide an example of why comparing your net worth is pointless. This is going to be a future video of mine, why comparing your net worth is pointless. I'll talk about it a bit in this video. Actually, I'll talk about it a fair bit in this video, but there'll be many more reasons listed in a future video. But for now, we'll go over how my net worth is technically more than double what I've measured it at. So we'll start with the accounting definition of an asset, a resource controlled by an entity as a result of past events that is expected to provide future economic benefits to the entity. What about a liability? A liability is a present obligation arising from past events, the settlement of which is expected to result in an outflow of resources such as cash or other assets. They're only measured when the obligation is probable and can be measured reliably. So this specific asset I'm referring to fits some of this criteria. However, this asset of mine and this liability for another company more so fits the definition of a contingent asset / contingent liability. A contingent asset / liability is basically the same as the prior definitions, but it's only a potential asset / liability. It's usually uncertain if it'll happen, and the amount is also uncertain. Now, this asset I'm referring to has a certainty amount, and its likelihood is technically certain as well. You'll note a lot of ambiguity in this video. Trust me, I'm not making up some fake fairy tale. We just need to go through these first. So thus, this, in a way, fits the definition of a contingent asset. However, the timing is not certain. The timing needs to be certain. This event is not some lawsuit where there's a chance that the case gets dismissed. This asset is tied to something that is guaranteed to happen, but the timing is uncertain for both parties involved. If you were going to do an accounting exam / assignment / quiz based on the example I'm using here, more than likely you would not count it on the balance sheet. But, as I said, technically you could consider this as part of your net worth. I'll explain in a moment, but we got to talk about these net worth type videos for now. In net worth tracking videos, many people don't include their cars, and some don't even include their real estate. Why? Those two are, by definition, assets, which is 50% of the calculation in your net worth. The reason these people don't is because they don't plan on selling their house or selling their car, so they don't count these assets because they won't sell them. But will they sell their entire stock market portfolio? No. Will they use the entirety of their retirement fund? Most likely no. So if you don't count these because you won't sell them / don't receive the full benefit of their value, then why don't you discount your stock portfolio or retirement fund benefits as well? The reason I bring this up is because, for net worth purposes, some people are a bit subjective about it. And also, no one really experiences the full benefit of their net worth. My house, for example, well, it hasn't even started building yet, but when it's ready, and when it comes time for me to look at my second property, I will be using part of my home's equity. How this is calculated, in my country at least, is 80% of the property's value. 80% of the property's value, take away the loan balance, equals usable equity. This usable equity is what can be used for another property. So let's say my home value is about $750,000. For the sake of this equity, they'd value it at $600,000 instead. Even if I had a loan balance of $0, I wish, there's $150,000 of unusable equity in this house. So, for net worth purposes, should I calculate my home's value at $600,000 instead of $750,000? Since I won't get the full benefit of it being worth $750,000? What if I try and sell it, and we're in a rough market, and it only gets sold for $700,000? Then those net worth calculations were wrong. What about your retirement fund amount? Has anyone really run their retirement fund dry? Does anyone plan on actually spending all of their retirement fund money? No. So why measure it then? Well, because it fits the definition of an asset, and thus it's included in your net worth. Same with stocks. People always buy and hold. So if no one sells, what benefits do you exactly derive from this high stock portfolio? Capital gains, sure. Does it pay out dividends? If it doesn't, then you're not really getting much benefit out of this. It's essentially just a number on the screen. Not to mention if you reinvest dividends, then you're just getting nothing really. Elon Musk has a net worth of well over $300 billion at the time of recording. It might even be $400 billion. Will he ever fully utilize the benefit of this $300 billion net worth? No. Why? Because he's never going to sell Tesla, SpaceX, etc. as a whole and retire on an island filled with trees made of gold whilst sipping expensive champagne and eating lobsters all day. Okay, so what's the point here? The point is, when people calculate their net worth, it's ultimately just some random number at the end of the day. Well, it's not random, but it's just a number at the end of the day. No one ever actually gets the full benefit of whatever the value of their assets are. No one really sells off their entire stock portfolio, no one really uses the entirety of their retirement fund, and no one really benefits fully from their real estate value. The banks cut the valuation to 80% for the sake of buying new property, and if you sell your entire property, what the market is paying can be different to its valuation. For these reasons, some people don't include their cars or houses as part of their net worth, since they never fully get the benefit of the value of these assets. So I bring that up because I too will never receive the full benefit of this extra asset I have calculated. It doesn't really meet the GAAP or IFRS standards, but in terms of your personal net worth, you can make an argument, the same way companies use gimmicks to adjust the valuation of their assets. This argument is to further drive home the point of, net worth is just a number. No one ever really fully receives the full benefit of the valuation of their net worth, and this will come into play in a future video. However, arguments can be made for my hidden asset to fit under the definition of an asset and thus be included in my net worth. See here, for something to be considered an asset, it must meet the criteria of probable future benefit and reliably measurable. Well, this asset of mine is reliably measured, and it is certain it'll happen. The timing is not certain, but it's certain this asset will provide a future benefit that I will not ever get to fully utilize, the same way no one fully utilizes their home value, their retirement fund, etc. For the sake of accounting exams, you wouldn't include my contingent asset on the balance sheet because the timing is uncertain. However, going off the exact wording used, this asset of mine is certain, and it does have a measurable amount. Here is ChatGPT confirming that this asset will be paid out based on companies' policies, so it's certain that this will be paid out. And here is ChatGPT confirming that you can technically consider this asset as part of my net worth. Here's a summary of what ChatGPT says relating to this asset in terms of accounting exams. You wouldn't consider this, but in terms of technical net worth valuations, you could. So to summarize what I've said so far, this asset technically meets the definition of a contingent asset. Its outcome is certain, and it is measured reliably. The timing, though, is not certain. I can see the payout listed on the company's records. I will never, ever get to experience the full benefit of this asset. However, most people never do. They never fully utilize the full benefit of their own assets. Not for their house, not for their stock portfolio, not for their retirement fund amount. Ultimately, these are all numbers on a computer/spreadsheet. So the time has come. What is this asset I've been talking about this entire video? This asset I'm referring to is a death payout. With my retirement fund, there's some insurances included as part of my fees. There's also a disability and income protection, but I'm never going to have all three at once. I can't die and be disabled and be temporarily unable to work. I'd be permanently unable to work. I've just included the death payout for the sake of this video. You could do the same with the others, I guess. So let's link this back to what I've said earlier. The timing is uncertain. Who knows when it's game over for me? But the value can be measured reliably. I can see it on my superannuation company app. The death payout, $309,000. There's a reliable measurement. And although the timing is uncertain, the outcome is. I mentioned the example of a lawsuit earlier. Sometimes that can get thrown out. It's uncertain. But my parish song is not. It'll happen. I also said I will never, ever fully receive the benefit of the value of this asset. Correct. How can I receive the value of the death payout when I'm dead? The same way most people never fully receive the benefit of their house, or their stock portfolio, or their car, or their retirement fund. Most people don't use up the last $10 in their retirement fund and then die shortly after. Most people don't fully realize the value of their car, unless they sell it, but then they just have to buy a new one. Most people don't fully receive the full benefit of their valuation of their house. If you're using it for equity, its value gets slashed to 80%, and if you sell the whole house, well, not only do you need to buy a new one, but sometimes its sale price can be below what it's valued at, making your calculation for net worth purposes pointless. So why not include this death payout as part of my net worth? It's measured reliably, and the outcome is certain. Yeah, I'll never receive the full benefit of its value, but the same goes with my future house, my retirement fund, whatever stocks I have, my car, even things like my collectibles at home. I will most likely never sell my Yu-Gi-Oh cards, my gaming consoles, my watches, so why include them in my net worth then? Well, I'll never sell my car, I'll run it into the ground. Why include that too? I'll never use every last cent in my retirement fund. Why include that? My land/house valuation gets slashed if I utilize it for equity, so why use the full value of my house for net worth purposes? If I want to sell the entire thing, there's the chance it sells for less than its valuation, so why include this in my net worth? If I don't plan on doing anything with my house/real estate, aka I don't use its equity or I don't sell it, then why bother calculating your net worth including your house, since you'll never fully utilize its full value? Same goes with my death payout. I'll never utilize its full value, the same way I'll never utilize the full value of my other assets. So if I count them, why not count the death payout too? It technically fits the definition of an asset, and when I include this $309,000 future death payout, my net worth reaches around $581,000, almost $600,000, and I'm only 28 years old. Now, I won't be including this death payout for future net worth considerations since no one else does. Everyone else counts other assets like stocks, retirement fund, real estate, stuff like that. The idea isn't to compare yourself to others. You don't do that for things like your net worth or salary, since we all have different chapters/circumstances in the game of life. But I want to include the same types of assets and liabilities that others do for a fair comparison. And since no one else includes a death payout in their net worth, neither will I. But this video was to illustrate how comparing net worth is ultimately pointless, since no one ever fully realizes the value of their net worth. Elon Musk will never fully utilize the benefits of having more than $300 billion in net worth, since he's never going to totally sell out of his companies and retire on a private island whilst drinking champagne from the fountain of youth each day. No one ever fully utilizes the value of their real estate, since even for equity purposes, only 80% of their value is considered from the perspective of banks. Most people never use every last dollar of their retirement nest eggs. Most people run their cars into the ground, so when your car is valued at $10,000, $15,000 or more, it doesn't mean much, since you never use that value to its full extent. Some people have expensive collectibles / other assets like an expensive Rolex watch or Pokemon / Yu-Gi-Oh cards that are valued at a high amount, but they never sell those assets, so they never fully receive the full value of said assets. It's the same thing in video games. When I was a Pokemon hardcore nerd, I had boxes full on Pokemon Platinum of level 100 Pokemon that had been specifically bred with perfect natures suited to their battle style. IVs, EVs, egg moves, specific abilities, etc. Did I ever use all these Pokemon in battles with my friends or myself? Nope. Most of them just sat in the box. I never utilized these video game assets, competitive battle Pokemon, to their fullest extent. The same way most of us in real life never fully utilize our net worths to their full extent. It's literally just a number in many cases. Most of my net worth is made up of my real estate / land and my retirement fund. I can't touch a cent in the retirement fund until I, retire. I can use it for other stuff if I changed my retirement fund into a self-managed super fund, but that doesn't make financial sense with a balance as low as mine, and it's also not relevant to this video. My real estate, yes, a higher value means even if 80% of it is used for equity purposes for another piece of land, that means I have more money to play with a higher valuation, but for the next couple of years at least, this value means nothing, since I won't sell it, and it's ultimately a place to live. I have mentioned my house is primarily an asset first and foremost in prior videos before, but early on, whilst I'm getting it up and running, its valuation means nothing. And as mentioned in this video, regardless of its value, I'll never fully utilize 100% of its value. But net worth is still a stat in the game of life, so I will continue to track mine through my video series. But just know, as someone whose net worth was $272,000 when I last checked, or $581,000 if you want to use accounting gimmicks, it doesn't mean much. Most of this $272,000 figure is made up of assets I can't really do much with. I know it's easy to say this kind of stuff when your net worth isn't negative / low, but consider everything I've said in this video and come to your own conclusion as to whether or not I have a point, regardless of what my net worth is. What's your net worth and what's involved in it? Who cares? But let me know in the comments anyway. Thanks for watching. That is all.